Takes a minute to set that up and get it going. And there it goes. Takes a minute to set that up and get it going. And it's delayed what goes there by 15 seconds or so. So that's why you hear me say that again. So I have to just mute that site on that tab on the browser. Anyway, I'll look at some other stocks here, but keep in mind that this morning there's a few economic reports as well that might give this market some gyrations right after the open. There's a PMI at 945 and ISM end construction spending at 10 o'clock. So those are, pretty big as far as economic numbers. So keep that in mind around that time. And Qs kind of hang in there, push down, and a little bottoming tail, but wide range bar down. You always got to be a little leery, at the open, especially, the futures just have a high tendency to whipsaw at the open. So having traded them for many years, it was rare that I did anything within the first 5 minutes. This ticker here shows what's happening. When you see it turn red like that and with the pink numbers, that means they're hitting it under the bid. Whereas these are just normal back and forth between the bid and the ask. Right, let's take a look at crude oil, which continues to hold up. It's a little bit of selling today, but look at that daily chart. After the push up, got above resistance, and it's just going sideways here. So, unless it can break under this area, it's just a consolidation in a bullish trend. So I'm just going to set an alert above the area, and in case it goes up there, and I'm going to set one down below. It could dip down to that green line and pop right back up. But if it goes down there, that could be a start. All right. Gold down 10 points and moving down to the bottom of the consolidation here. We'll see if it holds the 200 MA. With the dollar pushing up, it seemed inevitable that was going to drop. And so it's up here, pre-market, a little bit, 22, 22, 24, 22. So it's up a little bit more here, and it will be coming into some resistance overhead. It's got an area there. We'll see what happens. It's there, and I may as well set an alert up in that area. Because if the dollar, which has been trending up, gets up in there, I'm going to want to know if it stalls and starts to reverse, because that's going to have effect on, well, not only gold, which I'm not really focused on as far as trading, or those stocks yesterday was, but was involved in some other things. We'll see what happens, but I want to know if the dollar goes up there. Now, a lot of the stuff that you can see that's moving up and down here, this INGN is up 32 points. Well, that's probably an earnings. The name looks like a biotech. And what else? Amazon up 280. Doesn't look like anything there. And the financials, what are those financials going to do today? They look like they're going to go lower. And I like JPM lower as a short. I think this can keep going down. We discussed that at the end of the day yesterday. Really not concerned with this support here. I recognize it, of course, and the possibility for it to stall, but this large topping pattern here and the gap reversal and This consolidation is at the bottom of that red bar on volume. It really suggests it's going to go down through it. And as you know, Goldman Sachs has been heading down before the others. And it doesn't look like it's going to, it cut through the 200, and I don't see any reason why it's going to not continue to go lower. As far as any support, might stall there because it's down multiple bars in a row. But just like JPM, how much respect am I going to give this with this big topping pattern over here? Anyway, we shall see. And what else is moving here? This grub has been a pretty crazy mover. It's whipped back down here pre-market. It's right in this area where it could reverse. And a lot of this is going to depend on whether this market actually rolls over or not. You know, brings us full circle back to what's going on up here, and whether things actually move to the downside or whether they can, for whatever reason, get turned around. So those reports at 9:45 and 10 o'clock, they should have an effect on the direction of this market, at least short term. And other than that, you know, with all the earnings, the big boys that are coming out, well, we got Apple at the end of the day today, but after that, I'd have to go through the list and see what could come out that really affect this market with everything else that has. And then we know that the financial stocks, which have been getting beat up, reported good earnings, and they went down, and Facebook got sold into, and Amazon got sold into. So other, you know, still a lot of choppy, messy stuff, but you know, things really haven't broken to the downside in any big way. So we come again full circle back to this sideways choppy consolidation. So we'll just have to see what actually happens. See Roku. These are just what's trading actively, but there's no pattern there. Exxon heading down a little bit. So, you know, I've kind of focused on some of these oil stocks to pull it in, but they haven't done it yet. Tesla, there's nothingness there. There's a lot of things that are doing nothing. You know. Most things here, that are not much that's really moving, except for that INGN. Boeing down $1.50. Looks like it could go lower. And if this market does show that it's got some, you know, real direction to the downside here, I think we're going to find a lot of bearish call spread candidates and or intraday shorting opportunities. So I'll let Dan take over for open positions and any other comments, and then we'll see what happens at the open.
All right, awesome. Thanks, Greg. I got a little echo there. All right, good morning, all. Sound good, folks? I like to talk, but I don't like to talk if you aren't hearing me. All right, thank you. All right, yeah, I guess I had this shop up. We'll look at our opens in a second, and then I have a few other interesting gap trades here, which are pretty good to watch. This actually is one, well, let's just look at the gap. 126, so it's gapping right into this area of support. So it's actually not a tier one, which I refer to as the best of the best, meaning reward to risk and possible setup at the market open within the first 30 minutes. But this is a shock to this big bullish breakout bar, which Greg gave an awesome day trade on yesterday. And it looks like it started out strong here again. Look at that, went up to 138. And just like we've been seeing, many positive earnings reports. I guess it's the subsequent bad news when they have an analyst comments. That's typically the result when you get a reversal to this initial bullish, or, you know, they're reading the details of the announcement. It's not just earnings per share. It's what's the details explaining it. But in any event, let's look at opens, and then I'll come back and look at a couple other gap candidates. The XLE is an oil ETF that we're in, down a little bit, but we have a covered call. Our stop is under this pivot low now, and we have a fantastic cost basis with like almost a $6 open gain. So that's a great trade. This HAL is a beast. We have a covered call on this also, and nothing to do. It looks fantastic. XRT, we did a half lot yesterday. We knew it was extended at resistance, but the alignment of the weekly and the monthly, and we're going to be looking to add the back half on stabilization here. $45, high 46, high 44s. Let's see, STZ, we have both put spread candidates got filled yesterday. One in the main letter, which is the May expiration for way the heck down here, the 225s. And then we have one that expires this Friday in the weekly options trader at the 230. And we're still watching for a directional option trade with a little bit more retracement on the hourly chart. Let me change this to a 15-minute chart. UPS was just a swing trade, 1, 2, 3 yesterday. It looks like it's holding flat. I can't tell right now, but that still looks fine. It looks great if the market were stronger. So I hope, you know, it holds up in light of the continued little downdraft. You know, spiders are down 50 cents. Let's look at some other gap trades now. MTZ, light volume here, so I don't know if it's real, but if this opens up at 46.75, then this was an awesome, but for earnings, this was a great swing short setup. We have declining 20, declining 50. We have this descending triangle at the 200. You know, you draw a trend line here and then a horizontal trend line, wide range break to the downside, closing at the low with a weekly continued breakdown topping tail. Now with earnings, it's a shock. So the 46.75 is still at resistance. I get that, but let's watch it for a 30-minute high because of this shock pattern. Nutrisystem I was actually looking at yesterday, and now on earnings, 32.85 is there, but it's gap, even though it's gapping at that resistance, this was a nice bullish engulfing bar, and now it's been consolidating for 3 weeks or so and gapping up. Now, I like these, you know, fluid oversold better. This is still a bearish gap. I get that. But there's a price void above. So 30-minute high, I mean, this thing might chug to $35, $36, $37. I have no idea. But look at the 15-minute up here on the upper left chart. Gapped up, pulled in, perking here again, even though the market's down. So this is a very good gap setup, in my opinion. So I put that in a thumbnail. Now, say that's a lot more volume. Like that's real. Versus MTZ, I can't tell. STX, a lot of volume here. The initial, and these are earnings, an initial spike up, slam down again. So we're trading at 54.50. I mark it off just visually, but I'm just showing you right here. There's 54.50. It's gapping under this multi-month consolidation, and it's not something. And I'm just thinking out loud here, and maybe Greg can add a comment. I don't think Greg does either. We don't have a formula that says whether a gap is too big, too extensive, so to speak, because everything is reward to risk on the chart, and it's relative to how the gapping stock acts at the open. For example, I'll come back to this. Look at CMG the other day. We analyzed it pre-market, and we said it's definitely a no-brainer pro gap breakout. Reverse head and shoulders on this weekly chart in the bottom right. So this was a tier 1 setup for us. But my discussion at the time was, look, the thing closed at $340. I would have loved a gap to 360, because then it's just over all of this launching pad. This is a launching pad with a price void. But it the thing gapped up to 386, 36 points. So we were watching it, and it's just a matter of how aggressive. So it was definitely looked like a big excessive gap at the open. But that's when you go to your intraday time frames to say, well, I know it's excessive, but look at this intraday pattern, as bullish as can be. Back to STX. So my point is, this one is not excessive, in my opinion. It's gapping under all of this. So now that's step 1. Step 2 is I'm going to watch it at the open in a thumbnail and see if I can get a setup with a favorable reward to risk. It's a huge gaps. Big gaps are good. Okay, big gaps are good. Okay, well, when, we'll talk about that some more, because I want to pick your brain on that. When, like, Amazon was a big gap, but, this was on earnings, right? So the last Friday. So the problem, it was a pro gap breakout, and it was a big, number, like 160 points, whatever it was. The problem is, we then watch the intraday charts to see if this is going to continue or if it's going to do what it did. But yeah, we'll come back to that, because I want to know Greg's opinion on a big excessive gap, how he determines that it's not too big, and then how, his answer is going to be the same as mine. We will look for an intraday pattern. But let's come back to that, because I love, gaps. So let's continue. ABBV. Broke out of this, base, a retest. This made a higher low, the 20 right at the 200 MA. The 20 is curling up. Now I'm gapping to 102. Mark it off. Look, I'm gapping here. And you just eyeball it. I'm gapping above this. I have morning strength. This first 15-minute bar, nice wide range bar, went sideways. It's making a new high right now, relative strength to the spiders. This is another tier 1 watch for me this morning. It looks great. So that's step 1. Step 2, again, I'm going to keep repeating myself because it is what it is. I need an intraday compelling setup within the first 30, 60 minutes. And that's why I have it in a little thumbnail. So I see my thumbnail right now on this STX. It just made another leg lower. Look, see now, remember, you just heard me say 54.50 was not excessive gap, in my opinion. Now it's down another $1.50. So how much lower? Just hypothetically, it's now at $52. Is that excessive? What if it opened at 50? What if it opened at 48? What if it opened at 46? What if it opened at 35? When does an excessive gap turn into I'm going to buy the thing because the gap is creating a selling exhaustion. So enough on that. Now we're getting close to market open. UAA, I actually posted a chart in Facebook of setup. Remember, setup action, setup action. I saw this morning trading around 1830. So I made the chart lesson and then it sold off. Why did I like this? Well, when I wrote the lesson, it was gapping right, it was gapping there, 14 and a quarter, 1430. Pro gap here in February, multi-month consolidation, which is this multi-week consolidation in the upper half of this with a price void above. But now this action pre-market, it's off my list now. All right, let's look at some more. TPR 4640. Now this is a perfect example. So Greg, let's watch this together for a learning lesson. This is gapping to 46 and change right now, 47, which is way the heck down here. It's, you know, it's extended, but it's bearish. So I don't know what to do in this thing, but I'm watching it. But that's another example of, is it excessive? But let's say hypothetically, if we're just gapping the $52. It's still gapping under this multi-week consolidation. Then if it took a 5 or 10 minute low out, I would be pounding it. That would be a fantastic short. So it's all reward to risk on these gap trades. All right, spiders here again, continued downtrend on this 15-minute chart. In the green room into the afternoon, we recommended just a short-term short there, but now we're gapping down under this engulfing bar. It almost, I can't say magnet, but it does surely look lower.
I am shorting JPM under the 5-minute low. I'm going to put a stop above yesterday's high to start.
Beautiful breakdown here on the hourly chart. JP Morgan, daily. Yep, Goldman surely looks lower. And I don't know how much lower because look to the left, but you got to look at the whole pattern. Here's a big topping pattern, retest here. So that was a short-term bullish pattern where we could have sold short-term bull put credit spreads, but then another 2 ugly red bars here. One of those was on earnings. I forget which one. I think the first one. And now the bearish consolidation, breakdown, bearish consolidation, breakdown, weak sector.
Yeah.
So
Bars getting big. So I may wait for it to retrace because you still got 3 minutes to go in the first 5-minute bar and it's getting big. So I'll see what happens, but I may wait for it to retrace on the 1 or 2 minute. I'll let you know. Either way, I want to get it. It's just where.
Here's our NTRI that discussed as one of my favorites. Look, you use the pre-market chart provided as liquid as part of your analysis to enter. So it gapped up, nice rounding base here, very shallow retracement, and it's only 933 on the market. But it blasted. So it's just a matter of aggressiveness of how you want to get on these gap plays or any play for that matter. Greg shorted JPM at 931, whatever. But this is still a watch. Remember, I said the target, somewhere in here. I don't know. I don't know the target, but you just in management mode. Let's look at some of these other ones. STX. It's still a watch. Let's see what happens here. But again, my wish list, remember I was talking about 54.50 is when I said that's not excessive. But now, you know, it went down to 50. It's another $4.50 lower. So that, by definition, is lowering my reward to risk. MTZ, I said, had light volume. So now no interest. I wanted it to gap up here and then, you know, take out a 10-minute high to shock these bears in these bars. CMI, oh, I didn't get to that one pre-market. But this, look, CMI, multiple time frames, gapping under all of this support, multi-month support. Here's my pre-market. It broke out. It's all the way back down to the low. It's a breakdown on the weekly. It's a breakout failure on the monthly. So CMI looks great. And I'll just throw out there, that will be a fantastic 30-minute low. If it can just go sideways here on this pre-market support and take out the low, then this is a great short trade. So I put that in my new thumbnail to replace that TPR. Here was one we looked at pre-market. So it shocked this red bar, but it's right, you know, to this high, declining 50. It's still holding well. So this will be a 30-minute high candidate. Spider's still going lower, so momentum is with the shorts. So these are all, you know, I have some shorts of these gapping plays.
Dan, look for options call spread on OXY. See if there's something available at 79, 80. It's rolling over here. You know, I think it's oil is down a little bit. You know, it is consolidating up there, but that's extended. Maybe something that'll expire relatively short time.
Yeah, for you, that's like it expires in 3 hours. You want a 2 p.m. option.
If you got it, I'll take it.
All right, so 10 days out, the 79. Unfortunately, it's untradeable because they're too darn spready. The 79s are 34 by 59, which is preposterous. But they should tighten, you know, within 30 minutes. But I'll put it in my watch minder.
All right, so Eric, let's just short this. Let's assume it goes sideways here for the next 10, 15 minutes. It may go up into the gap fill. A lot of times these oil stocks have bounced back up, but yesterday was a topping tail after it poked above those highs. So it's definitely being sold at the moment. So maybe we can get a swing trade out of it, but let's start with a day trade and look for a 5-minute reversal.
Right, so folks, that's where you need you need to set up little chart thumbnails, we refer to them as, and it's just a bunch of 5-minute charts that he's up to bat. I mean, consider him like Oxy. You're up to bat in the next 1 or 2 or maybe 3, you know, batters. So you put them in a little window to look for that 5-minute reversal, as Greg just said, and then you swing the bat and you put the trade on. McDonald's here from yesterday, deep retracement, don't like that anymore. XRT, so we got filled at the back half. You know, we told them at $45, but you being here in the green room, wide range bar.
Let's do JPM here. 107, 81, 83. It's right there. And again, we'll still put the stop up above yesterday's high, and we'll tighten it up just to make sure, you know, it doesn't whip around on us.
Look, NTRI. So
Qs are breaking the 5-minute low, and the spiders are. So sellers are in control here. There's room to go to the downside.
So both with so I don't know if Oxy is Oxy's in. What is Oxy in? XLE or XOP?
It's probably in most of them.
Yeah. Wow. See, look. Wow. OIH. If this can continue to go sideways, we might get a little put spread there. So XOP consolidating at this prior high. And we nailed these oil stocks, both with directionals and put spreads. But with the market falling, that's why I'm looking at these sectors, because if they even were just neutral, then we could go down to a 2-minute chart on Oxy and try to get a more aggressive entry. IWM, yep, Greg mentioned that in the weekend letter, that this was the weakest. And that sure looks lower.
I didn't say it was the weakest. What I was saying in the past, it was showing relative strength. However, because of that relative strength, it had the most desirable pattern if the market went weak, because it had the room to the downside.
This G dot we have as a short under this red bar, but still holding here, but it's bearish consolidation within this ugly wide range breakdown.
Lumber liquidators is in the liquidators crosshairs again. If you remember that stock, there was some news on it a year ago.
No, I definitely remember. It's a Chinese company, and they had I don't know if it was just defective or fraudulent, products, and people were having to rip them all up out of their houses, the flooring.
Yeah, it's a little choppy here in the moment, but nasty down bar.
Yep, and see, we had that in my pre-market earnings list here, but when we looked at it, it didn't have any volume. This triple L is still not ready, but look at the volume. See, when we have climactics buy setups, I love this pickup in volume near the reversals. When you have gaps, you're going to get that ugly red bar on the gap day. It's totally not ready yet. I'm just making an observation. But rising 200, but it's ugly. I think this sector is topping out, the military. JCI earning, I'm just looking at my list here. This is a put spread candidate. You had a lower low here, snap back, curling 20. Let's see if we can get any juice for the 33s. Going out to May, the 33s is 20 cents. Not too bad. I wish it, we're closer to my 1% rule, which is 33 cents. But that's not bad. All you're doing is getting paid to call a bottom. And it's and you put your stop under here and you just monitor it day by day. That's it. Merck, earnings, nothing. Pfizer, gap to the 200, no pattern. This STX. Still weak here on the 5-minute chart.
J&J, Dan, call spread candidate.
Yeah. Bearish consolidation here. Let's see what we can get paid. Ideally, are you okay with a stop yesterday's high? Or does how tight? That's 132.5. That's 130.
I don't like playing things that tight.
All right, so no, there's no juice going out to May. The 133 is 14 cents. So no option trade whatsoever unless you wanted a directional.
No, it's not.
Right. I'm just talking more for our thought process for the viewers. All right, so shop here we looked at ugly gap. The problem is it's in the support, and you got a little bottoming tail now. So, you know, some buyers did come up. SMG is a mess, so I'm deleting him. Pfizer, mess. MPC looks lower with the sector. That was a nasty gap yesterday on volume. Wow. I had it in my earnings list for today. I don't know what happened to him yesterday. There's our JCI, Merck. HBI was a gap and crap, but there's no pattern right now. Hun is a mess. No pattern, no interest. The grub now looks lower.
I was looking at Square for a call spread, and I saw 3 days, and I see the 50 calls are 96 cents. And I was like, so this got to be reporting tomorrow.
You got it. But let me see for grub over this wide range breakdown bar, the high is 104. And why do I like this? Because this was a bullish pattern here. And we actually had it as a put spread in the weekly on over the high of this. But I gave a limit of the spread. And then it didn't get filled. And then when I saw this deep retracement, I just canceled it. And, you know, thank God I did. But now another breakdown, rally, gapping under this green bar. The weekly now, lower high. So let me see about the grub 104. For Friday, it's too spready also. It's 10 cents by 35. I just hate wide spreads. So, oh, you're going to like this, Greg, because this is very fair in my opinion. You can go to 10 days out, so a week and a half. The 104 calls are 5 cents by $1.55. So, homie, don't play that, remember? You're not, unless you know, it's set up as a... Now, if this can go sideways here for another day or two and not bounce, and then break the low, we'll short the stock. So I'm going to keep this in my watch list. It's just not ready now. ETN, that was a nice bearish 1, 2, 3, 4, 5. Broke down. You got some support here on the weekly, but you know, that would be a call spread candidate also, but it would have to be far away. ECA, nice little kind of bull flag consolidation here at the rising 20 after it broke out, you know, big run, but it didn't retrace that much. It consolidated through time. The weekly is an engulfing. The monthly is not bad with a price void above. So I'm going to keep an eye on ECN on a pullback. It looks pretty good. ECA, rather. EAT, nothing extended coming in, so I'm deleting him. MTZ, hey, remember it was light volume, and remember, even though I said I had no interest earlier because of the light volume just drifting in, I still come back and look at these for this very reason. If it takes out the high again, then you have a range expansion bar with a bottoming tail. But there's too much resistance here to the left, so I'm demoting him. BP, another oil. Wow, beast. Wow, this one exceeded the prior high. Engulfing and gap up. It's too extended, no pattern, but BP is a beast. AN, that was a nice pro gap breakdown. You can watch this 5-minute chart if it sets up. Oxy 5-minute is still, holding. He's been a beast. AMT is junk. See, there's nothing here. Put that in your scrapbook of junk patterns. And it's even junk for selling options on. AET, that's just holding and churning. No interest for me. ADM, it's junk also. It's on the rising 20. I see nothing there. THC, oh man, I didn't get to this. Shoot. Look at this multi-week bullish consolidation. Curling 20 to the rising 50. And look, when I talk about the gaps being too big, and that's where we all have, we'll get Greg's opinion more when we slow down, maybe around 10:30. But I love gaps just over resistance, because then to me, it's like the guy running a marathon race. He's fresh. He's ready to go. He had a good night's sleep. You go to your pre-market, and over this bar was your no-brainer entry. Stop under this. Stop under the prior low, or go shoot. But I'll watch that on a pullback. It looks great. Rig, that's another beautiful call spread candidate. Although but it has to be short term again. Look at this monthly. That looks like a core trade. Greg, look at, it's been it's in a trading range for over 2 years. And it's the 20 MA is now flat. I'm going to keep an eye on this for a core. But let's see if we can get any, because with earnings, let's see if we can get any juice for the 12, even, 12 and a half for Friday. $12.5 is 11 cents. Not bad. If I could have done that for the $13 call, then I think that would have been a no-brainer. RCII had a bearish gap, but it's filling the gap. No trade to me. The Nick tree we talked about, it's still a watch. It's kind of a little whippy here, but it's still a watch if you can get a bullish five-minute entry. Akamai, I didn't get to pre-market. Nice bullish gap. Out of this consolidation, converging 20 and 50. But, and that's step one. Step two is, look at this 5-minute chart. It's too volatile. It's too unpredictable. It's not a clean intraday setup. But it's still a watch. And number two, let me see about a put spread. $70 put spread. Oh, Sahad, core trade to us means the larger multiple time frames are in alignment to hold the trade long term. Long term could be months. It could be years. If something, look at this pattern. Well, I don't like this breakdown, actually. I like the ones that are more a full uptrend, downtrend breakout. But look, since 2015, so that's 1, 2, 3 and a quarter years. If this is truly the bottom, the price void is going to be, this could go first, first target might be 17 bucks. Second target might be 21. Third target might be 30. So that's what I mean core. FCX. No, it's too sloppy, but I had buddies in Charlotte who are in the business. He was buying this. He says, I do not, he's in the aluminum business. He says, I do not think they're going out of business. And he has like 120,000 shares with a cost basis of like $7. So he's doing pretty well on that trade. But now look at it. That's ugly. Bearish consolidation. And see, and I've told him, but he's hard-headed. I've told him about selling covered calls on his holdings to lower the cost basis, just like we teach. And he's he's a rich redneck and just doesn't want to be bothered. I'm like, all right, can lead a horse to water. All right, back to Akamai. Let's see what I can get for the 69.70. Oh, very fair again. The 69s for this Friday, 1 penny by 69 cents. And next week, 0 by 85. Since it doesn't interest me to trade the stock, you are gone. FLWS had a bearish gap, but it's junk. This looks like a buyout to me, but I don't know why it was gapping up, $4 or $5 or whatever. But that looks weird to me. So there's no pattern. UA and UAA are, A and B type stocks. So that got negated. You're gone. Spot, I think, has earnings, but we were looking at this yesterday. Spotify. Yeah, let's look at spiders here again. So it was in a downtrend. It's still in a downtrend on the 5-minute chart, but this is a nice engulfing bar, kind of a 1, 2, 3. So, buyers are stepping up. The daily is still a gap down in a narrow range bar with a doji. It's still, bearish as of now. But 5-minute popping's not giving us a good bias. Longer short. Q's stronger. Q's made a new high. So definitely something is helping the Q's. I have little thumbnails on all FANG stocks, and obviously part of this is Apple. Look at the nice run. Let's run, buck and change. I don't know what that equates to in Q's points. Hey, Greg, I was thinking on my bicycle ride yesterday, since the diamonds are price weighted, so what that means is the price of the stock determines its rating in the Dow 30 in the diamonds, which I think is unfair. I mean, if somebody didn't want to split their stock, like Google and Amazon, that's why those carry a big, well, Amazon's not in the diamonds, but you get my point. The ones that are expensive in the Dow are Boeing. Look at this. So part of the big, massive run we had, part of it, and I'd like to know what percent, was on the backs of Boeing. But my question or observation is, I would love to see what the diamonds would look like if they were market cap weighted. How would this look different? I could probably Google it. Maybe somebody already did the form. It'd be, easy to do. You just reallocate, figure out their market cap and reallocate it. IWM, still weak. Looking at my sectors, KRE. Man, I got us out of our put spread on Friday at the well, let's see, this is Tuesday, Monday, Friday, right at the near the dead high. And I said, you know, we'll watch it on a pullback. I had ECA as a watch. It's not pulling in yet. CMI. Now, see that it made a new low and failed. So even though it was a very bearish gap, I'm not getting the intraday setup that I want. Yeah, Spotify has earnings this week, but and it has massive puts. We talked about if you wanted to own, if you would not mind owning Spotify, you could sell the 140 put or 145 and have a very nice cost basis if assigned. MCD's a mess. You're gone. UPS, we're in. You know, it's still fine, but he needs to get moving. Walmart's still a dog. I was watching that to see if this big consolidation on the daily or weekly, but I'll watch it on my other computer in the Dow 30. Oh, I have Nixtry in here twice. ABBV, bullish pre-market. UAA, he's gone with his brother, UA. TPR, now see, okay, so Greg, maybe you can add your comments now. Remember I told you it's gap into the 200 and it's too big. Well, it looks like the market agreed with me because buyers said, hey, at these prices, I'll take it.
It's not going anywhere still one way or the other.
Right, but would tell me what's your thought process if you have any interest in shorting it?
I'd have to break the lows, of course.
Okay, well, see, I didn't know what that was, and of course, I thought you might be looking for an intraday entry, and because of this, you know, big range expansion so far, I wouldn't short it. Let's say hypothetically we got a 5-minute double top. I personally wouldn't do it.
It's within a sideways mess. Even intraday, it's of really no interest when there's other things out there that probably have price voids. It doesn't mean it can't go down or it couldn't be a profitable short trade. It just, you know, there's better things out there to pick.
Right. Okay, XLE. Now, here, let's talk about covered calls and options. So we have a covered call, and we're short the 75s that expire this Friday. This, let me pull it up, the current price, and we sold them for like 75 cents or somewhere 75, 80 cents. So two things. We could actually buy them back right now at 9 cents. Or just let them expire worthless like they look like they're going to do. Or another alternative is to roll them down. So you look at the chart and you ask yourself, hey, where do I think I would be okay with calling a short-term top by Friday and getting paid for it? And then it's not a loss because I'm long the underlying. And so maybe 74. So if we were to roll these down and sell the 74 and buy the 75, that would bring in an additional 19 cents. Not bad. But another strategy could be leave our 75s naked, put a stop over the 75 nakeds, 74.64, and with time decay, it's still guaranteed to stop out at a profit. And we should go out another week right now and sell another 75. Let's see what I can get paid for that. Wow, only 29 cents. Wow, the juice is really sucked out of these. The 74.5, we can get 42 cents. Yeah, my God. Here, I'm gonna show you all the whole trade, just, you know, so you can kind of. That's the history.
Short SPY under the low of the day here, stop above the high of the day.
And on that note, let's look at selling a call spread that expires tomorrow, 268. Let me see what the juice is, though.
I'm tempted to under this 5-minute low, but let's see if it'll break. It's not that far away. Low of the day is 263.40. JPM still just chopping sideways, so it's fine.
Yeah, no juice on the short terms.
So we've got, Dan, I think this is what you would call a bull sandwich on the 15-minute SPY.
Yep. Yep, the bull is there in the middle, the green bar, and it's sandwiched. I mean, I prefer the red bars to be a little wider range, but yes, that's the concept, that a bull bar is sandwiched between two bearish red bars. Correct. And we're in a downtrend. Remember earlier I said, hey, you know, there's some buyers there, but I said still a downtrend. And the daily looks lower. So that's when we short bounces.
The ticks have been relatively neutral here, kind of bouncing back and forth between 0 and minus 600, but still negative all day. Bouncing up here a little bit as the spiders reach that low of the day. And there's a 5-minute sell setup on the 5-minute Qs, but they showed relative strength. So I figured let's pick on the weak one.
Yeah, if you own this rig stock, it's just a no-brainer time to short an out-of-the-money call against it. The Oxy, let's go down to a 5-minute chart. So it made a new high, came back, and now if it...
The low of the day is actually 37. I was looking at the bar prior, but it's knocking on the door here. It's stalled at 40 and bounced up a little bit. There we go. There we go. Now we just have to hope that Mr. Schizophrenic doesn't decide to rip back in the other direction. But, you know, you got 30 minutes of going sideways with an inability to fill the gap, and it breaks the low of the day where it did not have any type of an extended move to break the low of the day. So that's made the pattern pretty attractive.
And this CMI we were watching, if it can go sideways here, it looks great. You know, daily, weekly breakdown. I'm looking at a call spread also.
As I'm thinking, you know, ideally this can go down to 262. That's where the prior consolidation is, looking at the 60 minute. But it's an area, you know, up above. So, and I'm thinking you can push down through it since it couldn't bounce, but let's see.
In that CMI, the options are too spready. So you would have to short the stock if you liked it. And whenever I look at CMI, you know, it's big industrial. I look at cat, deer, both of those weak.
I missed the 5-minute entry on OXY looking at other things. We'll see if we get another one. If you were watching it, the 5-minute topping tail there, that was the place. 9:55 time. JPM is finding sellers in the 108, 8 to 10 area. It's going sideways here. So from the bearish side, I want to see this NYSE tick start pushing lower. It's making lower highs on the 1 minute.
Yeah, Hector, here's a 5-minute chart. It broke out, you know, back to minor support. But you got this declining 50. You got this prior gap breakdown bar, and the market's on the bearish side. So I would be extremely careful on any longs. It would have to be pretty darn juicy. Wow, McDonald's, that gave it up. I mean, like the 2-bar reversal on that pro gap yesterday.
Rising dollar, not good for McDonald's. You remember the movie, what the hell was the movie? Bruce Willis movie and Samuel Jackson and John Travolta. The Travolta and Jackson are killers.
Oh yeah, Pulp Fiction, yeah, that's a classic.
And Samuel Jackson asked John Travolta, says, "You know what they call a Big Mac with cheese?"
Mm-hmm.
They had this conversation while thinking, or on the way to killing somebody or after it.
Right. Yeah, on the way, because then Travolta repeated it to the guy they were interrogating.
Yeah.
Yeah, I just saw Samuel Jackson in another movie last night called The Hitman's Bodyguard. He's a great actor. He's made, I don't know the total number, but over 100.
I think
maybe
more
150 movies. Yeah.
What's the other guy? Big guy actor. Whatever. Yeah. Just no real conviction here, but our cues are popping back up.
Yeah.
I guess something must be strong in there.
Yeah, Apple is at the high.
Yeah, they're
Yes.
pushing it up, getting ready to probably to take it down on the earnings.
Tesla, Facebook neutral.
Win is up.
Amazon, it's neutral, but you know, maybe if we get good Apple earnings, then we can do a put spread on Amazon if it shapes up. I like this.
Looking at stuff that's up here in the context of their daily charts, it's like totally meaningless.
There's the Bitcoin. Oh, Hector, you're talking about the puts. I missed that part of your question. The $100 puts are at the gap fill. How far out were you thinking? For Friday, the $100 puts 32 by 41. Yeah, they're a little spready. You can get, you know, it's a watch. But I don't know. I'd be reluctant to do it right now. Yeah, Q's definitely outperforming. Baidu. Yeah.
Yeah, EV, it's kind of slow. Financial services got a pretty relatively tight consolidation up above there. Looks like it's going to go lower. Call spread maybe. Earnings 522. Still there, Dan? Yes, no. Spiders are right at today's open. That's where it fell from before. It's where we need to see it have trouble.
Yeah, ECA, this is a fantastic pattern. Consolidation, it's under the 20 and 50, closed at the low, now gapping under it. It's weekly rolling. So, you know, ideally 56. And there's only 50s because they only have $5 apart. The midpoint for the 55.60 is 60 cents, but it's spready because the 55s are 50 by 85. But when I load it up, the midpoint is 60. So if our stop is over 55.52, if we get stopped out, it's going to be in the money, which is not preferable. We like shorting, you know, over resistance, but they don't have it. So you have to make a decision. We have to make a few decisions. Do I want to hold it 17 days? Do I want a $55 strike? And do I want to play around with this fairly spready stock where the max gain is 60 cents a share. So those are the issues. VOYA, look at the weekly, lower highs, resistance, rally to resistance, engulfing. But this almost looks like a condor play, you know, resistance above and this big base. And the 55s are only 35 by 45. So 55.60 is only 40 cents. But that's a 55, which is way above this. $55 is at the weekly and monthly highs. So you can get 40 cents, but you got to hold it 17 days. Look at this Nick tree. Well, you know, it wasn't easy unless you, that's not clean. Oh, thanks, Dan.
I'm assuming they reported him this morning, but I didn't look.
Wow, I missed this gap trade. That is some pain.
DRQ call spread.
Which one?
DRQ could even be a day trade under
VRQ, I'm not getting it.
Drill Quip. Earnings July 27th.
I've never heard.
Oh, you can look at NOV. This one has been weak within the sector for quite a while after gapping down.
All right, yeah, I'm just looking at the juice on, yeah, I was going to say, and I just proved it to myself. I was about to say, I've never heard of DRQ, so there's a 98% likelihood that it's, if it's optionable, it's very spreading. And the 45 calls are a dime by 95. So welcome.
That's your option, buddies.
Exactly, exactly.
Dollar's going up. Just got that alert.
Wow. Wow. You know, it's interesting when Greg, maybe you can elaborate, but you know, the bonds are the bonds. They are what they are, and the interest rates, but the dollar is what it is. It's the dollar, but just the different fundamental, how, you know, they relate to each other, that increasing rates help the dollar, obviously, but the dollar also goes up with, you know, demand for dollar, and which is also a function of how the world, you know, respects our fiscal policy and the value of the dollar relative to other currencies.
Short-term interest rates help the dollar. And it hasn't recently, because short-term interest rates based on the 3-month yields have been going up for about a year and a half.
Okay.
The Fed's been catching up with that. So
it's a good point.
Begins to help the dollar, but the Fed's been raising for a little while, very small increments.
So what do you think has, well, two questions. What's prevented the dollar from moving up over the past year, and what do you think's made it rocket the past 10 days?
It's hard to say. Could be just Trump, you know. I don't know why. I mean, I thought it would have gone up in the past when its short-term interest rates were rising with pretty good momentum, and it did not.
Right. I mean, this rally, it's just started. Otherwise, this whole, you know, since what month is this? Since November, downtrend, and then in a coma for a couple months. All right, so NOV.
Even Diamond Offshore, DO. And the sector's been strong, so, you know, ideally, I mean, they could chop around and do nothing for a couple of weeks, so especially with the, you know, the dollar strength.
Yeah, $20 calls are only a dime. I know you mentioned MU this morning.
It was going up last I looked. Probably still is with the Qs showing strength.
Yeah, look at the semis here on the 5-minute are breaking out. So they've been. I mean, you might be able to find the semi's right here. You know, gap down, wide range bar, sideways, breaking out. I wish this price void were bigger though, and then that would be a great day trade. But yeah, the target's just not very big. NVIDIA a mess, but nice 2-bar reversal here on the 15-minute chart, but there's resistance here. Intel. I know you're still watching this as a core, so you know, when the time's right, we can even sell a put on it to improve the cost basis. Wow, Greg, Intel is juicy. It's not. It doesn't have earnings coming up, does it? Because the May 51s are 90 cents.
July 26th.
Wow, that's very juicy. It's meeting my 1% rule. So 1% of $51 strike is what? 51 cents. And we're getting paid 90 cents. So that's 1.8%. And I'm doing this in my head. 1.8% of the 51 strike price, plus I have $1.36 of cushion. Oh, you're right. Intel, absolutely. I should have remembered that. That was the gap up on earnings day. Absolutely. Thanks, Dan. The 52.5 put is 73 cents. So I'll keep an eye on this for when the market kind of stabilizes. These are juicy.
All right, guys, if you're not in JP Morgan, shorted here under 108.20, and we're going to put a stop above the high of the day. Qs look like they're going to go through the low of the day here. If they don't, we're really in a mess. And we came up and retested the day's open and wanting to roll over. So does the low of the day become a W bottom and we're back going up again, or are we just heading down? So as we're coming into, well, it's 11:30 past already, 11:37. So let's see if this market wants to get bearish or whether it's just more garbage.
I want bearish. Just because I'm a trader. Yep, spiders here weaker again.
Ticks are getting a little more negative, minus 700. Could have done the Qs with a stop above that 5-minute base. I didn't. I'm just mentioning it. Sometimes you're just getting right up there at the top of the the range and put a stop relatively close above it. Kind of gives you a good reward to risk. You know, could get chopped pretty quick anyway. Who knows? You know, if the market's going to get bearish, it probably would. It'll probably turn out to be a good entry. Buyers knocking on the door to make a new low. Some buyers stepping up there. Where's that low? 263.18. JPM low of the day is 2. Yeah, I'm talking about spiders low of the day. Yeah.
Right. I mentioned that. Right. Yeah, I thought you said Q.
Dan in chat, not.
Oh, okay.
I said I want to see it break 108.20. If we can get the spiders picking up some momentum to the downside, everything should start clicking. Ticks bounce from that minus 700 reading. We want to see them stay below zero, ideally even below minus 200 and roll over here. But one of the things that I look for when looking at the tick is if it, as it bounced like that 500 ticks, the spiders didn't do anything. So initially, that's a good sign. Even though the trend is down, you look at the 5-minute spiders, the trend is down. The daily is, bearish from yesterday. The majority of times, somebody's going to step up even at what should be weak support. Just the way it is. And if, the supply can't push through it, then you have buyers come in and short covering starts, and maybe it pushes above resistance, or you just get that whip back and forth until eventually it tightens up. And that's what's happening in the markets on the daily time frame. Battle between buyers and sellers is whipping back and forth, and it's getting tighter. So far, JPM can't push below that low. Actually trying to push higher. Spiders are holding the low too. But, but then what's happening on the higher time frames is all rather meaningless. But, that certainly could start something meaningful. And that is the rub in a sense of recognizing what's happening on shorter time frames. And, you're seeing what's in opposition on the higher time frames and ignoring it in a sense, because the higher time frames suggest otherwise. But we shall see. Now, this little poke on JPM above these most recent highs, not the high of the day, ideally that little poke will become a breakout failure, and then prices would head down. Spiders going back down to the low of the day. Ticks actually went up to zero. Spiders giving it another try.
CNBC was just showing that tapestry.com TPR. What the heck is tapestry.com? What do they do?
But that's where you bought your pants, Dan.
That's for what?
I thought that's where you bought your pants.
Tapestry?
You know I like joking with you.
It's like ancestry.com. How does that support being a public company? I wonder what they're valued at. I don't even know their symbol.
Another exciting day in the markets. Q's pushing up here a little bit. You took your stuff down, Dan? I'll put my charts up there. Let me size this a little bit smaller. It was JPM. This is what I was talking about. It's good to be right sometimes. It's good to be right all the time. But that little poke right there, and if this was going to hold true, That's why I said that little poke should become a failure. And then it should look to drop. Now that's a 1 minute chart. But the higher time frames are suggesting it should go down. You got a bearish hourly there. I know there's messes here, but this thing has shown relative weakness. And, there's the 5 minute. So now the 5 minute, we got less than 10 seconds, about 10 seconds to go on this bar. So I'd love this to be a bearish reversal and then start heading back down again. WFC is a little different. The 5 minute looks similar, but you can see the difference in it. WFC is weaker, overall has been, with the controversy about it, it's inappropriate practices, let's say. But sometimes the weaker one, Sanjay, isn't the one to pick, meaning the weaker leads the way down. And if the sector continues to be weak, it's usually the stronger ones that then follow through. And whereas the Wells Fargo is not likely to go up, but it may not go down as much. It's definitely weak. And let me go to the weekly chart. So, if the sector, you see how far it's already come down and it's at support. But, if the sector really got weak, this would turn into a measured move lower. And would be something like that. Down to that low. And it's certainly a possibility. Yeah, I missed that, Dan. I'm a little angry at myself about that. Stopped looking at it. Well, I knew it was time for it to work. Guys in the room, if you understand what it is that I'm looking at with something like this, and you're doing it, hit the mouse. If you understand the patterns and what I've explained, this. You see the hourly, the breakout to a new high that failed, and now you've got the resistance there. I just scanning through other stuff, and I messed up because that 5 minute right there was a nice setup.
Greg, see that call spread I just gave you?
Yeah.
What do you think? 10 days? It's only a $2.50 wide call spread, and we're getting 38 cents. That's pretty good. It looks like a no-brainer to me.
Then it's good to go. If it's a no-brainer, good to go.
All right. Well, I'm going to post that, folks. So if you, like it, go for it.
I will copy this into our comrades on YouTube. Maybe they will step up and join us in the room. Carl King. Carl said Tapestry may be a site owned by Carol King, laughing. Spider's going down. It's working for us. JPM going down. These are the kind of trades I personally like. I'm willing to give them a little extra room. I'm willing to add to them. I like the gaps, of course, but I'm really not, and I'm not, sometimes I'll do it, but they have to be like perfect type of gaps to go like with a 1 or 2 minute 1, 2, 3 type of a pattern, which is cool. But they're a little stressful. Stressful because they can move fast, and if they don't work, you need to kill them fast. You guys use time and sales at all? I'm not a big level 2 time and sales type of trader, but I do like it for visual effects.
You mean to keep you entertained?
Well, no, it's more than entertainment.
Okay.
With a dome. Yeah, dome is good for futures. Let's see here. Let's see. Let's see if I can do a little something here. I'm doing a, see, I'll make a little recording here to show you what I'm talking about. We are color code the time and sales. I'm not really paying much attention to the prices. I'm looking at the pattern. So when, say like JPM here, which is the little chart that I'm talking about, and it starts to go up, and you see the level 2 on the top there, and there's one on the bottom for the spiders. When that ticker turns purple like that, and it's like the text or the numbers are pinkish with that purple thing, it means that sellers are hitting below the bid. So more aggressively selling. However, when you see it turn light green with the yellow, that means they're buying above the offer. So this changes moment to moment, and it can be meaningless. You got to put it in the context of the trend. And the chart that I'm showing you of JPM is only a 1 minute chart. But as I mentioned, the higher time frame says it's going to go lower, and that 1 minute is in a downtrend. So what I like to see is when it comes up to resistance, sellers want out bad, and they start hitting below the inside bid. Now, the other side of it would be if it was in an uptrend and bullish, anytime it comes down to support, they start buying above the offer. So that kind of aggressive buying and selling is really very short-term pieces of information, but it kind of gives me that momentary confirmation of what I'm looking for, as a day trade. And it's saying, the spiders are trending down or at the low of the day. And I'm watching the ticks, which are above these charts here, and seeing what level it's at. But, as the spiders push to the downside, I want to see those purple spray of orders coming in. And while there are those momentary bright green ones that flash by, like right now, I just want to see more of the purple ones, just like that. And you see the spiders are grinding their way lower. And so I want to see JPM do the same thing. So there's a 1 minute topping tail now. There's a little breakdown failure on the 1 minute bottoming tail bar. And as the spiders go lower, in addition, I am looking at JPM with observation that it's showing a little bit of relative strength. But as you see, it's coming down to that bottoming tail bar. I want to see those purple sprays of trades coming through under the inside bid. And then ideally, of course, I want to see it accelerate lower and get crushed. And then as it comes down to support, going to be looking to bid and close, of course, but you then are likely to see the green sprays coming through as short covering has to buy above the inside offer. So you see the Qs and JPM hitting below the bid, and they're going lower. This is what we want. Right? Now, I wish JPM, spiders are moving relatively slow on a 5 minute chart, but we just want to see the waterfall collapse. And spiders are coming into our 262 target area. It's got a ways to go. 64 cents is a ways to go there. And there's nothing to say if things really get ugly, it won't go down to 261. But, we're going to start trailing this thing and locking in a profit. All right, so let me stop this little recording, and I will put the link. You can. I'm waiting. This takes a little while to process that. Let's see what I am talking about. You can watch that whenever. Come on, JPM. I am thinking, why is JPM holding here? It's got that support there, you know, with the spiders moving down as they are. Ticks haven't hit -1,000 yet. I don't know that they will, but if you looked at a 1-minute tick chart, you see it's making lower highs and lower lows. Q's almost reached the low of the day. That would have been a perfect spot on the Qs to have shorted them up there. I was focused on the spiders since they were weaker. Big pop in the ticks there. little bounce in the Russell, the Qs, the spiders, little bounce. Looks like not even something of significance, just potentially a lower high on the 1 minute, but 5 minute time frame, just a green bar. Russell a little bit more convincing on the 5 minute for sure, which may be suggesting or signaling that we're entering the doldrums early, where it's going to consolidate now. Qs couldn't break the low of the day. But you can see on the hourly chart, it's just a sloppy, choppy mess. Nothing to really suggest anything of significance is changing here, other than maybe things got a little bit ahead of itself somewhat on a very short-term basis. And there's certainly no trend changes. And, when I look at the spiders or Qs, whatever, on a 5 minute chart, and they're making lower highs and lower lows, the bias isn't going to change until that changes. Of course, the depth of retracement, if it was able to retrace all the way back up toward a prior high, that would be something definitely of note. And if it, didn't take out major resistance yet. JPM popped up there a little bit as there was obviously, I would say, some short covering. And as it came up to the minor resistance area, go back to that video that I showed you with the time and sales right up in there. They just started blasting below the inside bid again. So now, is it going to hold that low? Hope not. I want to see it go down to the low of the day. So I think this, again, my thought, anything's possible, that this negativity, right, this downtrend, I think it's got, the next 15 minutes or so to accelerate itself into a, lunchtime doldrums coma. The ticks are holding up above zero here, but where they dropped from before. Someone on YouTube asking market internals, are they suggesting downside? They've been neutral. So, intraday here, the ticks have been primarily negative, but they're bouncing up again a little bit stronger. But, end of day internals, they're neutral. But intraday, they're starting to get closer to a green area, a bullish area, but they're not quite there yet. So sentiment today is there's more put buying than call buying. It's getting close to an extreme, which, could cause a bounce. It hasn't really happened yet as a much, but may just mean stabilization. Buyers stepped up here. There's a lot of wiggles and jiggles. All right, that should be the extent of that move up under ideal bearish conditions, that is. Waiting to see if JPM will crack this little area here. I suspect buyers getting some confidence from the Q's ability to move back up to that resistance area. Did you guys watch that video? Find it of any help or interest? Cool. Yeah, it's just, you know, visually just seeing those things changes, you know, without the chart, it may not mean too much. And it is a moment to moment type of thing that can change. And so you can't really get hung up very much on its meaning other than in the moment. Ronald wants me to check oil. Crude oil, Ronald, crude oil is, you know, on the daily chart, just chopping sideways here. It's down a bit, but, you know, with the dollar moving up, it's going to put some pressure on oil, and it definitely put pressure on gold. So maybe in the coming days, we'll see a little bit more weakness in crude oil. You know, those correlations aren't, you know, lockstep tied together. Sometimes they take some time to connect. And sometimes those intermarket correlations disconnect for quite some time. In the chat, Patrick, the one, that screencast link, there's a video. I showed the time and sales, and I was explaining the color changes of what I was looking for at it, you know, with the chart that I was showing. Take a look at FIS. Let's go FIS. Bull put spread. It's already made a pretty decent sized move off of that low. So yes, NJ, I mean, if you could get, some premium under there, well, let's go to the weekly and see how bullish it looks. And we still got quite a number of days to go in this weekly bar. By the way, in this program, it's the only program I know that does it. It doesn't calculate weekly bars based on starting on Monday to Friday. You're only going to get a Monday to Friday weekly bar on Friday. Otherwise, it's calculating 5 bars. So part of that is last week. That's just the way they do it. All right, so let's look at the options. So it doesn't look like they have weeklies. So below 94. You got to go 95, which could be okay. So 17 days out, you can only going to get like 40 cents, and then with a spread, really isn't premium in it. And then earnings, I guess they were today. I guess that's why it's up like that. So we can go 45 days out for 95s. And if you want like 95, 50 cents. "45 days is a long time, but it looks pretty good." You could, let's just see. Let's see this. 290s. I was going to say even like $90 to sell a naked put, but not worth it for 15 cents. For 17 days. That's the problem, with options, is when the premiums aren't there, and you could find opportunities and you just can't do the trade because the option premiums aren't there. Apple's going to report earnings after the bell. Someone's asking me in YouTube. So uh, 5-minute chart here. There's no pattern on the 5-minute. If the market turned around and was bullish, you could consider it on a retest down here, but again, it's gonna report earnings after the bell, so it probably gets jittery. The closer you come to the end of the day, the more jittery it's going to get. Five-minute sell setup on the spiders here. Let's see if we can close this out going into lunch. I guess Dan went to the gym. just chop, chop here. Oh, that little climactic kind of buy couldn't bounce at all. I guess the market is having an effect. We'll see. I'm going to set an alert because if that can get back up to that high there, it'd probably be a good swing trade. Yeah, it does look lower. Railroads. That's a mess. Look at every time it tried to bounce. Topping tail, topping tail. That might be a good candidate for a bear call spread. I mean, the pattern is. And other options are make any sense. Almost everything doesn't. 33. It's just 17 days. I mean, to where you start getting some premium, you're so close to being at the money. You know, it's a this moment in time with this market for option trades. It's like, we call them, do you feel lucky punk trades? You know, they take them on for that length of time for that money. Okay, we're forming a topping tail on this 5-minute spiders. Moment of truth is here. So this is where I look at my time in sales, and I want to see those purple sprays coming through. So I see the chart and say the chart's saying it's in a downtrend, it's up near resistance, the declining 20, it should go down. So where are the sellers? And on the other side, if the sellers show up and I see all those purple sprays, it better go down. Otherwise, those sellers are doing nothing. Yeah, that's in a downtrend. It's coming to support. Ideally, that would have been good to get a piece of that a couple of days ago. And so always looking to initiate, right, a bearish position in a downtrend when prices are at resistance, not at support. Now, this trend suggests it should go lower. And again, if you can get in around here, you know, your reward to risk is much better. Yeah, so when you say the hourly is extended, it's not a good place to initiate it. And when you see that kind of an hourly, it's possible, well, you don't here, but if you were to see some type of pattern, a bearish pattern on the 5-minute, and the hourly looks like this, it would probably be a low odds entry point. You'd probably get whipsawed if you tried to manage it on the 5-minute. Make sense? So the reverse of that is, here's the hourly up at resistance. And if we were to go into the 5-minute, right, that would be the perfect, if this is, I've got this lined up, right? So that area there on the 5, that double top, right? That double top, which is right there. And so here is that sideways mess on the daily, and then the break and the retracement into it, and then you go down to the 5-minute, and you've got a retest pattern there. And you can look at the candles, right? The breakout failure, the topping tails. So if I was one of you guys, I'd print out that example, because that, what I just showed you there is worth the monthly subscription to this room 100 times over, putting those pictures together and understanding those multiple time frames. I think JPM is ready to give it up. And I would love to see the spiders give it up at the same time. Then we're going to close this stuff down for lunch or whatever. Ticks have been staying above 0. Come on. Just wish this could accelerate to the downside here. So slow. Because it looks like it could go lower, but they're just such a grinder. You don't want to hold it anymore. If you could just blast through the low of the day. Q's holding here. Look at it, Ronald. Talking to Ronald in YouTube, looking at JD for a long. He is. No, Ronald, that's garbage. Why you want to trade against the trend? I mean, it had a little breakdown failure, but look at the weekly chart. It's down near support. You got a couple of bottoming tail bars. I think you tie up your focus with this kind of junk. I mean, if it's long term, maybe it makes sense. Maybe it would make sense if you really want to own this. You know, you think like it's a great thing to own, or intermediate term. We could sell a put, or even a $35 put. You could sell it for 65 cents, taking that money and lower. And, you know, if you got filled, your cost would be that much lower. It's just the pattern on the daily chart just isn't developed enough, as I see it, to make sense to want to own this unless you have a long-term perspective. You know, maybe it's just lunchtime here. I mean, nothing much is happening on the upside, but spiders won't go down. Sell setup, not in this 5-minute downtrend. I mean, I'm being asked on. One second, guys. All right, guys, let's see if these spiders will drop. And this JPM, where's the low of the day here? 70, 70, 70. We're below the low of the day. Cover half. If you're in it, cover at least half. Stop, break even on the back. And just tickling under the low of the day, a lot of times they're going to try and hold. The spiders took a while on that 5 minute. Now they definitely have to start to roll to the downside. And if you're in it, I want you to bring the stop above those highs right there.